Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 20th of April. All right, now this is where the week really starts after the first connection of all markets, right? We've gone through Asia, Europe, North America, and we can start to see where the dust is settling after the weekend. Now, equity markets in the US, lower, right? And this is mainly due to Tesla, dropped 3.4%, I think it was, based on, they had one of their auto cars, no driver, and anyway, it crashed into a tree and killed a couple of occupants. So that's weighed on the company, as well as Bitcoin, which has got a huge investment in, also dropped, 8% or something like that. So the equity markets were dragged down by that. Now, you'd think there's all these different profiles, and we've been dealing with risk on, risk off. We've been dealing with the impact of the intermarket relationship between the treasuries, equities, and the currencies. And it's hard sometimes to see what's driving what. Now, if this was a risk on, risk off profile, the dollar block, euro, sterling, Aussie, Kiwi would be lower and the dollar would rally. Now, that hasn't happened, right? So you can quickly deduce that that's not on. So let's not worry too much about that. Look at the treasuries, right? This is the next step you would be sort of going through, having a look what's happening with the treasury yields. Now, they bounced back a bit during that North American session. Right, so you'd think with higher yields, the dollar would rally, okay, and the other pairs would fall. Once again, that hasn't happened, right? So we're in a situation where the market is basically waiting for the next big move. Now, if I just take you back over to the news and sort of show you what they're sort of talking about, dollar slumps to 6-week lows with all eyes on interest rate moves, right? So they're just sort of put a bit of a story in here to try and sort of work out where the market focus is, saying last week's lower move on the US treasuries has led to a big flush out of dollars. Now, that would have been the case, but the dollar did sort of bounce back. So it's a bit of a hard one to sort of, a bit of pill to swallow and say, well, is that exactly what's happening? I think what we saw is a bit of a flush out of stop losses under 91.5. Okay, and the dollar, bit of a clean out of old stale long positions. Now, we do have a big week coming up, and sterling is going to be the major focus. Now, I'll show you the charts in a second. Sterling's rallied 150 points, a bit of euphoria around the vaccine stuff, but also in anticipation of strong macro data this week. That's what they're putting it down to, right? We've got employment figures today, average earnings, unemployment numbers, claim account change, etc. There's a bunch of numbers coming out. Keep an eye on these numbers. I would suspect with the current up move in sterling, if these numbers are weak, well, then you know what? All the hype around the UK getting the vaccines done is all rubbish, and we should see sterling come off. Then on Wednesday, we've got the CPI and PPI coming out in the UK. That's our second lead into, is the UK economy bouncing? I think it's a bit early yet. They've only just sort of come down out of lockdown. I don't see these numbers being dramatically better. So we'll have to wait and see as that happens. So let me just take you over to the charts. I've refreshed all my trend lines. And you can sort of see clearly, okay, that the dollar is moving lower at this point, okay, across the board. You're getting still different price action on dollar CAD, even with oil at 63.5. It's sort of bouncing around a little all over the place. Ottawa added some deficit spending. Okay, so that's sort of thrown things out on dollar CAD. But having a look here on euro, now we had that 120, the figure level. There's like a multi-top here around 119. It was around 88 to 94. That's blasted through as I expected. You get some stop losses triggered, but it hasn't gone far. It's just sitting up here now, trying to work out, should it be here or not, or even higher, right? That's what we're waiting for. So we need a bit more information about what's happening in the US and or Europe to work out whether euro itself keeps going up or down or stays where it is. As I said, the big move through the European North American session was sterling, right? Jumped up through 138.40 and he's sitting up here in the clouds at the moment, waiting for this data to drop. That's why the data is going to be important to tell us whether, even if we get really strong numbers, the move has already been factored in as far as I can see. So the one big change here would be weak numbers. We see it sort of come straight back down. Aussie and Kiwi, they're just following suit with that US dollar move. almost mirror for mirror moves there on the Aussie and Kiwi. And so that's just on the back of a weaker dollar. Euro obviously higher, pushes the dollar basket, the dollar index down. And that's what we've got. All we've got at the moment is what you can identify is, okay, the dollar's going down on certain pairs and it's going, and obviously the other pairs are going straight up, Aussie, sterling, Euro and Kiwi. That's what we've got. Now you've got to fit this into the puzzle of where's the next move going to come from. So when you come back and you are looking at the various markets, as I said, these markets have been a little bit more advanced than usual. For the Asian session coming into the start of the day, I'll be looking at the US equity futures, but bear in mind, okay, the move in the equity markets up here during the North American session, okay, largely driven by the weaker Tesla price, okay, was not translating into a risk on, risk off day. So when you are looking at the US equity futures for the Asian day, just take it with a grain of salt because that's not really working at the moment. Of course, and this makes it a little bit tricky, and we're probably going to wait for the European session to get this UK data to see really what's happening with sterling and then its subsequent impact on the dollar. At the moment, the dollar block, okay, if I draw a line here between Euro and Swiss, the dollar block here at the moment have been going up. I'd expect that to roll over a little bit and the dollar's going down. So we've just got to sort of play it out from here and see how this sort of really comes back into play. I'll just change over to the FX Market Insight. You can see what's happening with the safe havens, the risk on, risk off pairs and commodities. Try and work out, don't just look at the major pairs, look across the board and see what's happening. See if you can see relevant price action. What we then need on top of that is momentum, and that's where the good trading opportunities will be around your technical levels when that momentum comes into play. All right, a little bit of a lesson there on how to get this connected. All right, guys, that's pretty much it. So for me, it's a real big sterling sort of day. Next couple of days, sterling is the key focus. Has been as loose as a goose of late on the chart. So just I would be reducing your risk a bit. You're going to get you're going to get the same cash because it's going to move as much. We just want to see things start to line up and make sense because at the moment, the activity on the connection with the equities, treasury prices and the currencies is all out of whack just at the moment, right? So we want to see that sort of reconnect. I'd say it's probably going to more than likely happen during the European session, if not the North American. All right, guys, have a good one. All the very best. Cheerio.